Of course, I talked about the CPI numbers, but on top of that, we have the uncertainty over the debt ceiling discussions. So how does that bode for the greenback?
Look, I think in the near term, the US dollar is likely to fall a little bit further. If the dollar couldn't stabilise when the core CPI more or less met expectations, then I think that's just showing you the market participants want to take the US dollar further down in the near term, at least until this debt ceiling issues are resolved properly.
Which are the currency pairs that will be more supported with a dollar weakness in the coming weeks?
I think dollar yen is probably the one that's got more downside, partly because the yen is the safe haven currency, and also because I think that the Bank of Japan is slowly but surely getting ready to tighten policy for the first time in decades. And I think that would be a watershed moment for the financial markets, and I think you'll see that play out in the yen as well.
How long would that take? Because we had seen that speculation earlier in the year and that didn't happen, and we're now stabilizing right now the Japanese yen at that 134 level.
Yeah, I think that the key data point for the Bank of Japan is going to be the labour cash earnings for April. That comes out 3 or 4 days before the Bank of Japan's June meeting. I think that is going to be the key data point in Japan, probably for this year. And the reason for that is that the April number is when you see the partial effects of the labour union business shunto wage negotiations. Those shunto results were the strongest in about 30 years, and I think you'll start to see the data impact in the April numbers.
Joseph, what are the sort of drivers for the Aussie dollar at the moment? Obviously, it's going to benefit from broader greenback weakness, but is there really a good news story when it comes to how uneven the Chinese recovery is?
You're right. The Chinese recovery, Haidi, has been very mixed and disappointing so far this year. There have been some signs out over the weekend that perhaps the Chinese authorities are going to start to respond to that by allowing state-owned enterprises to issue more bonds to increase investment. And that investment, I think, could flow through into more demand for metals. And that, of course, is Australia's largest export, including things like iron ore and copper. So that could be the turnaround in the Aussie dollar. But at the moment, these signs are pretty tentative. I'd want to see stronger evidence that demand is picking up for commodities out of China first.
Does that mean there's more downside when it comes to China dollar, I should say, rather than dollar China?
Oh, look, I think the Chinese renminbi probably can weaken a bit further. Wouldn't surprise me if dollar China were to hit 7, for example. It's not that far away from it now. I think that the CPI number that comes out, that's going to just reinforce the view that Chinese domestic demand is still very soggy. But for Australia, we care much more about factory output and particularly investment spending, and there may well be some government policy support for that from the Chinese authorities.